All right, so to break down the global economy, the events at Jackson Hole, and their effects, we're joined by John Allison. He is the CEO of Unio Capital. John, always good to have you with us.
Pleasure is mine.
All right, John, so Fed Chair Janet Yellen speaking at Jackson Hole this morning, saying in her speech, and I quote, "The case for an increase in the federal funds rate has strengthened in recent months." Do you agree?
Yes, it's strengthened. We don't think it's going to happen in September. We think she's pointing to the obvious thing that the labor market is tightening, the U.S. economy is going to do, particularly in the second half, somewhat better. So I think she's correct about that, absolutely.
But you don't think a rate hike is happening in September. Do you see one in December?
Yes, because as I was telling you before the show, I think people are not looking at the Fed's interest rates hikes totally from the point of view that I think the Fed is really looking at them. They are trying to basically prick any potential bubbles, whether it's inflation bubbles, whether it's labor cost bubbles, whether it's little mini asset bubbles in commercial real estate or in the stock market. And those little interest rate hikes are pricking those bubbles. I was giving the analogy of the ski slope operator that may dynamite the hill to actually trigger an avalanche before the real avalanche happens. I think that's what the Fed is doing with these rate hikes.
But they haven't triggered an explosion in a while. There hasn't been that dynamite placed because they've been holding off on another rate hike.
Yes, but last December, not that long ago, they triggered the little dynamite. The market went down. We don't think it's going to go down anywhere like this. We don't think the market's going down, but it went down, and now, lo and behold, 8 or 9 months later, we're a lot higher. So I think they've actually, in a way, achieved their purpose.
Well, the language used was pretty strong, about as strong as the language that a central bank head could use, saying the case is strengthened. You don't think it's going to happen in September. But do you think that this is a case of the Fed crying wolf, that now we're not really believing them because they've lost credibility, threatening to raise rates so often and having done nothing?
You know, I've become a real fan of the Fed. I think they're being very, very prudential. You know, they're just, in a way, calling it as it is. They're taking every month and every quarter and looking at the data. So in this particular sense, I think they're just being careful because they don't want to act precipitously. In that sense, you know, some people interpret it as crying wolf. I think I would interpret it as just, you know, what you see is what you get. They're just being careful. That's it.
John, you may be a fan of the Fed. Larry Summers, not such a fan of the Fed. He said that the Fed will not be able to stimulate the U.S. economy out of a recession because there's not enough room to maneuver. And many have said that the Fed does not have the arsenal should a black swan event take place. But Janet Yellen, in her speech today, was really trying to reassure the market that the Fed toolkit was in good health and that there are plenty of weapons left. What do you think of that?
Well, I'm with great respect to Larry Summers, I think a couple of things that he may be missing. First of all, the fact is that if the Fed has to do something big, it's very likely that it will do it when interest rates are somewhat higher than they are today, because it's very, very unlikely, and I've said this actually on your show, that any recession is around the corner. But to your point, even if it were around the corner, the Fed, and Yellen said this today, the Fed can reverse course. They can put interest rates back to zero. They can take the QE asset purchases and expand them. They can expand the kinds of assets they expand. So I think while I understand where Larry Summers is coming from, I understand his concern, I think Yellen and company have an awful lot of firepower if they really want to use it.
All right, you're confident they have some firepower. Let's talk about some of the big macroeconomic global risks that have been at play here. The Brexit was cited by the Fed as one major factor in not raising rates the last time when the data seemed to be supporting that. The markets did initially drop off after the Brexit results. They have since reached new highs, and seems like the Brexit's fallen off the radar.
Yeah, as I think I've said, previously in your show, and I've certainly said to our clients, the world is so hyperactive and so hyper tense, and there's so much pessimism. I think people are ignoring the much bigger picture that there are a lot of very good things happening around the world. There are risks, to be sure. There's no question about it. There are systemic risks that could happen, whether it's Europe, whether it's China, there are all sorts of things. Brexit, we didn't think was going to be that big, but that sort of thing. But fundamentally, people are underestimating the health of many companies, the health of earnings, despite the slowdown in earnings. They're very healthy, slow earnings, but healthy earnings. So I think it's the glass half full part is actually a case needs to be made for it.
You do certainly sound like you're an optimist. So what would the brief case being made for the global economy being in a much better space than it's thought to be?
I think the global economy, and I'll tell you there are some issues, is actually trying to take its collective assets, whether these are private assets of companies, whether they are the assets of households, or whether they're the assets of governments, and they're utilizing them just a little bit better. So there's an improved use of assets, and out of that improved use of assets comes healthy growth. Obviously, there are countries like China, which are critical to the global economy, that's going through a major transition. It has to succeed going through that. If it doesn't, we're going to be in trouble. Europe has its own set of stresses. So they're clearly stresses. I'm not underestimating them.
All right, well, one country that has been experiencing a lot of stress is Japan, and they've gone into negative interest rates. As you know, Bank of Japan Governor Kuroda, he's speaking on Saturday. What are your expectations there?
I think Mr. Kuroda is in a very, very tough bind. Everybody expects him to do something large, to be, accommodative, to buy more assets. I think he's going to hint at doing that sort of thing. I think he's going to keep people guessing as to whether he's going to do it. The problem is, I don't think there is that much room for maneuver for him. I don't think he can do that much more. He can do something. I think Japan's problem right now has got to be to get growth going, and that really is a question of structural change, and that's more of a Mr. Abe problem than it's a Mr. Kuroda problem.
Okay. Thank you so much, as always, John Allison, the voice of optimism. John Allison, CEO of Unio Capital.